Hi friends, welcome to Yadnya Investment Academy. Friends, we all have heard and learned about this term unicorn quite frequently these days. India is home to about 30 unicorns now. What does this terminology unicorn mean? It means privately held companies that have reached a valuation of more than $1 billion. So in today's video, we'll be looking at the fact whether a retail investor should look at the option of being a part of the growth story of these startups and unicorns. So what we'll do is we've divided the video into 7 parts. First of all, we'll be telling you what are these unlisted stocks and how different are they from listed stocks. Second, we'll be looking at what are the different financing stages of these private companies, what are different ways in which they raise capital. Then we'll look at the type of unlisted companies. Then we'll see how these unlisted companies are valued. And then we'll look at how you can invest in these private companies. What are the different ways in which retail investors can buy stocks of these unlisted companies. Then we'll do a comparison of an unlisted stock with a listed stock. And then finally, we'll see what is our take for retail from a retail investor's perspective. So let's look at unlisted stocks and how are they different from listed companies. Unlisted stocks are the stocks of privately held companies which have currently not gone through the initial public offering cycle. So there is no IPO that's been floated for these companies. Examples could be HDB Financial Services, Reliance Jio, Oyo, Ola, Paytm. So all these are privately owned companies whose share you can't buy or sell on the publicly available stock exchanges, right? So if you compare it with listed companies, for example, Reliance Industries, HDFC Bank, Kotak Bank, the shares of these companies you can buy or sell anytime on National Stock Exchange or Bombay Stock Exchange. That's the main difference between unlisted stocks and listed stocks. So the main benefit of looking at these private companies is that these are startups that are trying to explore new technologies and they're trying to explore new business plans. So if you have a high risk appetite and you're more inclined towards being a shareholder in companies that are high on the innovation aspect and you want to participate in the new tech story that's currently going on, then maybe you can look at the option of exploring these private companies. Now, what are the different ways in which these startups and private companies raise funds? So they start by seed capital, which is nothing but the initial pool of money that is put in by the promoters to start the business. Then comes the stage of an angel investor, wherein they look at few investors who are completely in alignment with the promoters. So angel investors are the people who give in the initial money for building the initial prototype of a product or the service on which the startup is working upon. Then comes the stage of venture capital and private equity, wherein a prototype is ready and the company is now looking to a go-to-market strategy and growing the business and setting it up. That's when they need the money to grow the company from an initial prototype to taking it to market and then making it available for their customers or consumers, right? So that's when the venture capitalists and private equity kind of investments come in. So there are these series of funding that these companies try to raise from venture capitalists and private equity firms. It could be series A, B, C, and D kind of funding. We've seen recently the growth story of Flipkart, wherein it was acquired by Walmart. But before Walmart acquired Flipkart, there was more than 20 rounds of funding, series funding that has happened for Flipkart. Flipkart raised money from multiple investors in more than 20 rounds, which included Morgan Stanley Investment Management, Tiger Global Fund, and SoftBank. We'd also seen the series of funding that has taken place for Paytm. They'd also raised money from SoftBank and Financial and Alibaba Group. So both these companies that gone through that series funding, and both are unicorns now. So now, friends, let's see what are the type of unlisted companies companies that are currently available. First and foremost, there are companies like HDB Financial Services, Reliance Jio, Reliance Retail, which are backed by good brands, which are backed by good parent companies, which is Reliance Industries and HDFC in the case of HDB Financial Services. Friends, if you want to understand if you want to do a fundamental analysis of these parent companies, we do offer that as part of our stock subscription offering. So if you're looking at doing an in-depth analysis of these parent companies, feel free to visit investyadnya.in and look at our offering of stock subscription, right? So that's the first type of companies where you already know that these are backed by good brands, these are backed by good parent companies. Now let's look at the second type of companies, which are these startups that are trying to disrupt the existing businesses. So there are companies like Paytm, Ola, Oyo. So these are all the growing tech-based companies which are trying to establish new businesses or trying to establish new technologies, right? So friends, now let's see how these unlisted companies are valued. Since these are not listed on a stock exchange, there is no market price that's available for us to judge whether these are undervalued or overvalued. Generally, what happens is there is a fair value that's given to these companies based on by doing a discounted cash flow kind of analysis or by comparing them with their listed peers. So there are these basic valuation techniques that are used for valuing these companies. So what happens, friends, from time to time, the promoter of these companies, in order to meet their working capital requirements, they sometimes get into these private placements wherein they involve investment bankers and wealth managers for generating and raising this capital that can help them in meeting their working capital requirements. So that serves as a good reference point when we look at valuing these companies. Another reference point that you can look at is when these companies are trying to raise strategic funds and strategic capital from private equity players or venture capitalists. These companies do a very thorough due diligence process wherein they look at the growth opportunities, they look at the sales opportunities and potential of these companies, and after doing this thorough due diligence, they attach valuations to these companies that can also serve as a good reference point. However, we would definitely like to mention it to you that there is no fair price. It's very difficult to find out a fair price for these companies. One classic example we can look at is Reliance Retail. So it was valued around the company Reliance Retail. It was valued around 5 lakh crores in the grey market, wherein each stock was valued around 850 to 900 rupees. But when Reliance Industries, they came up with a swap offer wherein they said 4 stocks of Reliance Retail can be swapped with 1 share of Reliance Industries. The value that Reliance gave to the stocks of Reliance Retail was in the range of around rupees 475 to 500. So you can see that people who would have owned that stock in the grey market, its value eroded by around 50% when Reliance gave a valuation to Reliance Retail, right? So be very thorough with your due diligence process, and it's very difficult to find out a price for these unlisted securities. So we would definitely suggest you to take recommendations from your investment advisors before putting any money into these unlisted companies. So friends, now let's see how you can invest into these private companies. There are multiple channels available, but none of these are formal channels because these are not listed on known exchanges. So the first option that is available is there are a lot of intermediaries and startups that have now come up that felicitate this buying and selling of unlisted stocks. However, please be wary of the fact that the initial amount required for buying these unlisted stocks is higher as compared to listed stocks. There are these startups which mention that the minimum investable amount required for buying these unlisted stock is at least 50,000. Another fact that you need to consider is that they ask for payment upfront and the delivery of these stocks is done on a T+3 basis. So there is a big counterparty risk wherein you have paid the money, but there's no guarantee that you're going to receive these stocks in your demat account. This is when the stocks are available in demat form. There are more hassles involved if the unlisted stock is not available in a demat form. Now, another fact that you need to consider is that the commissions that these intermediaries and startups earn on these unlisted securities is pretty high. So there is a good bias for these companies to sell these unlisted stocks, right? So do a thorough due diligence before buying into these stocks. Another important fact that you need to consider is that you can easily buy the shares on these portals or on these channels that are available for unlisted stocks, but there is no guarantee that if you want to sell these stocks and you want to do an exit from these stocks, there is no guarantee that you are going to get a buyer on these platforms. So be very cautious when you look at buying these unlisted stocks. The second option for you is to buy from existing employees. There are these startups and companies that give employee stock options or ESOPs, wherein employees are allowed to buy certain number of shares at a predetermined price after completing certain years in that organization, and they can buy these stocks at a predetermined price. So if you already know someone in these startups, you can also look at the option of buying these stocks in demat form if these are available in the demat from these existing employees. But an important note to be aware of in such situation is that there are few companies who do not allow their employees to sell these shares to external people. So do have that check done before you buy these shares from existing employees of a startup. The third option that you can look at is to buy from the owners directly, to buy it from the promoters. So friends, as I mentioned, the promoters from time to time, they keep on looking at private placement as an option for raising working capital for running their startups. So these promoters, they take help from investment bankers and wealth managers, and they tap onto their network to raise this working capital for running their business. Another option that exists for you is to buy these portfolio managed services or alternative investments fund. So other than retail investors, financial institutions like these portfolio managed services and AIFs, they also try and buy these unlisted stocks, and they try to capture the pre-IPO valuations and try and make profits and gain out of the rise in valuation after a IPO is done. However, please note that it's not necessary that after an IPO is done for unlisted companies, it's surely going to rise. A classic example of that is Uber, wherein after the company was listed, its post-IPO price was much lower as compared to the pre-IPO valuation. Now friends, let's compare a unlisted stock with a listed stock. Let's first look at look at from the perspective of taxation. So if you're holding onto a listed stock, let's just take example of HDFC Bank. If you're holding that stock for more than 1 year, there'll be a long-term capital gain tax of 10% on it. For unlisted stocks, the holding period is at least 2 years, which means in order to make it eligible for a long-term capital gain tax, you would have to hold on to that unlisted stock for 2 years, and after that, if you're planning to sell it off, it'll be taxed at a 20% tax slab rate, but with indexation benefit. Now, friends, let's analyze the process of buying or selling these stocks. So, if it's a listed stock, it's very easy, right? You can buy or sell these stocks on the stock exchanges by using your broker account, right? So, it's fairly simple. But if we look at unlisted stocks, it's a slightly tedious task if the shares are available in a demat form, right? But if these shares are not available in a demat form, it's even more cumbersome. There is more paperwork that will be required for you to buy these unlisted stocks. Another important aspect to look at is there is a delivery risk and a counterparty risk also associated when you're looking at buying these unlisted stocks. Let's now look at the aspect of information access in these companies. So for listed companies, there's more information available. These are established businesses that have gone through the IPO due diligence process. Moreover, there are these regulatory requirements of having of keeping the investors educated. So there's a lot of transparency into the kind of information we need for making an assessment whether the company is doing good or bad, or if the stock is undervalued or overvalued. However, in case of unlisted companies, we don't have any transparency into the financials of that company, the sales figures of that company. These companies are generally in the early stages of their growth and early stages of their evolutions. So it gets very difficult to extract that information. You would have to rely on external research because you don't have that information available handy, right? So transparency is an important parameter when you're comparing an unlisted and a listed security. Another factor that you need to consider is the liquidity aspect. So if it's a listed asset, right? If it's a listed stock, there is a certain liquidity that's available to it. There is a certain amount of shares that are bought and sold on the exchanges on a daily basis. It's transparent to you that what is the liquidity that's available. If we leave these small cap stocks where the liquidity isn't good, but at least for large caps and mid caps, you have a fair idea about the liquidity that's present in that stock. While in the case of unlisted securities or unlisted stocks, once you have bought the stock, you don't know when are you going to exit it. So suppose even if you want to exit, it's very difficult to find a buyer who's willing to buy that unlisted stock at this price at which you would want to sell it off. So you would have to rely a lot on your stockbroker for making buyers available for these unlisted stocks. You may have bought this stock thinking that there is an IPO that's maybe coming soon, but that IPO may never approach. So there is no assurance that the IPO is going to take place or you are going to get an option to exit before the IPO comes. Now let's just analyze the risk part. Of course, there is market risk associated with buying listed stocks. However, we still feel that it's comparatively less risky as compared to investing directly into unlisted stocks. Reasons being there are kind of risks. There are multiple type of risks that are associated with buying unlisted stocks of these private companies. One is the liquidity risk. Second is the counterparty risk. Third is that these are growing companies. There is no assurance that the technology in which these companies are investing is going to work well. There's a very high risk of failure in these startups. So what's our take on these unlisted stocks? Friends, if you have already met your financial goals and you already have savings and investments in place to meet your long-term and short-term financial goals, and you have surplus money available, that's when you can look at the option of putting that money into these unlisted companies. Given the very high failure rates of these startups and of these unlisted companies, you definitely need to keep this in your mind that this is the money that you may completely lose if the business is not going to perform well. So bear that in mind, that it's a high risk, high reward kind of a game. So please make an informed decision after doing a thorough due diligence in discussion with your investment advisor. Thanks for watching this video. Jai Hind.